Well, hello and happy Thanksgiving. Now, I promise this is going to be something you can give thanks for, this post right here, this video. It's going to be great, okay, because I am going to cover one of my favorite authors and series and let's just call it methodologies is Rich Dad Poor Dad, Robert Kiyosaki, right? He's amazing, and he has had multiple books written by people he calls his Rich Dad advisors. And this is one of those books. Okay, I'm a big fan of it, and it is called Tax-Free Wealth by Tom Wheelwright. Now, you may be the kind of person who doesn't understand a lot about your taxes. I think this is very common, but learning some of these basics is going to go so far in helping you preserve your wealth, okay? If you don't want to learn all the details, you don't want to go to bed with the tax code, that is okay. And you can hire professionals like myself or Tom Wheelwright here, not putting us on the same level. But you can hire people when you get into the specifics and you need help on very specific details, very new, like actual deals going down, and you need to make sure that it's going to be executed right. But as an individual, for you to just know just enough to be dangerous, you can plan your work, your investments, and you can plan them from a tax perspective as well as other perspectives to be sure that it's not just how much money you're making, but it's how much you're keeping, right? Government is the biggest taker of our money, the average person at least, and I think the more we can minimize that, the better. Now, before we even get into the details, I'm just gonna cover that really quickly. You may be the kind of person who says, oh, Trump is a cheater and stupid and he doesn't pay any taxes and that's unfair, and okay, maybe it is, and maybe a lot of other people, a lot of rich people do not pay a lot in taxes, and you might be upset about that, okay? I just ask you to open your mind for a moment and consider a different perspective. And that is that the vast majority of the tax code in the US and around the world is incentives for you to behave a certain way. The government realized that people respond to monetary incentives. So they said, hey, you know what? We need the private sector to build more houses. What did they do? They made it monetary, they made an incentive that you could benefit and at the end of the day have more cash in your bank account if you went out and built houses. Similarly, why do businesses get such big discounts, tax incentives and all that? It's because they need jobs created, and the government isn't creating many jobs. I mean, I guess it does employ a lot of people, but they're not trying to actively go out there and innovate new jobs, new companies, new businesses, all this stuff. So they said, hey, somebody else go out and do this and we'll make it worth your while, okay? So really in this light, from one perspective, paying $0 in taxes is evidence that you are a true patriot, because you are doing what your government is asking you to do, okay? Consider that as we go through this, and then also remember, hey, any more money you don't have to pay to the government and you can keep in your bank account is probably going to help you out. That's a good deal, right? Okay, so let's move on a little bit, and we're going to look at the initial... Oh, let's first look at a quote. Even Albert Einstein says that the hardest thing in the world to understand is income taxes. And this video and this post is not meant to educate you on every single detail about income taxes or any other kind of taxes. Again, this is meant to make you just dangerous enough to start planning and really thinking about how you're earning your money and how you're saving your money, okay? Now, some of the golden nuggets we're going to cover here. First of all, how do you pay $0 in taxes? First, we're going to look at types of income. Then we're going to look at tax-free cash flow, a specific example of that. And lastly, we're going to look at passive gains, and there's a reason that there's a question mark in front of that. Promise we'll get to that. First of all, the types of income and how they're taxed. The first one, and the most common, is earned income. And I say most common not by dollars earned, but by number of people, and I guess you could say the percentage of their income. Most people earn their income, right? And this is any kind of 9-to-5 job, anything you're working for, it's earned income. And yeah, it's kind of sad, but this is the highest taxed income. Does that sound unfair? I kind of agree. But again, the government wants certain things to be done. They want jobs created, they want, they want many things, but they incentivize through the tax code, and this is basically saying, hey, you average worker, we don't really care that you want a job. There's a lot of people that want jobs. We want people who are going to go out there and create jobs. Okay? So yeah, sad but true. You can either cry about it or you can accept it, learn the game, and play it a little better, right? That's what I try to do. And that's what I recommend you try to do. Okay, so then we have capital gains. I'm sure you've heard about. This is any time you buy something for $1 and you sell it for $2 later. Okay, there's a difference between short term within a year and long term longer than a year. But, let's say you bought a Bitcoin for $1 a few years ago and now you can sell it for $8,000. Well, that's income of $7,999. Okay? So these are capital gains. It can be many different things. Could be paper assets, could be a trading card. I mean, it could be an antique ring. Anything you buy for less than you sell, that's a capital gain, and vice versa would be a capital loss. Finally, passive income. Mailbox, right? Mailbox money. Passive income, it can get very complex in certain cases, but it's exactly what it sounds like. If you don't have to do much to get this income, it's taxed at the lowest rate. A great example of this is rental income. This is one that most people can understand. If you own a home and you rent it to somebody, you're not really doing a lot. It's the asset that's doing the work, right? It's the home that's doing the work. That is passive income. Okay, before I move on to the next one, an important thing to consider about all of these types of income is a loss in one category can only offset a gain in that same category. This is very important. One place where it probably impacts the average American more is, say, in capital losses and capital gains. If you did indeed invest in Bitcoin and you made $1 million, you're going to be taxed on that. However, if you look at your portfolio and you have a bunch of stinkers in there, a bunch of losers that have gone down in value since you bought them, and you don't think they're ever going to go back up, well, now's the time to sell them because you can offset that million gain and pay tax on only the difference. So if you had $1 million in long-term capital gains and you had $100,000 in long-term capital losses in the same tax year, then you're only going to pay taxes on $900,000 of that. Okay? The same thing applies for passive income, and we're actually going to touch on that in our example. Next up, let's look at some tax-free cash flow. I want to give a simple example. I made the numbers so that they worked out nicely for me. They may not always be this way, but that's your job to figure out. I just want to show you a good example of how this can work, all right? So let's walk through a deal that we're going to do. Okay, first, we're going to buy a house for $330,000, which, let's say total costs, not just the mortgage, but everything, let's say it comes out to $2,000 a month. That is, for the year, we'll look at an annual number. For the year, that's going to cost us $24,000, okay? Now, let's say you can rent it out for $2,500 a month, okay? That gives us $500 in monthly cash flow, or $30,000 over the year, and that's $6,000 in our pocket, cash in our pocket, or probably the bank, that we make from this house this year, okay? Now, there are quite a few different kinds of deductions that we can take with a rental property or with a business, right? Deductions are where it's at. I teach a lot about this, but depreciation is kind of a magical deduction that you can do in real estate. it doesn't actually, it's not actual money going out of your pocket or investing in the home in any way. It's you can call it a phantom expense. What it is it says, okay, you have this house worth $330,000, and the government defines a certain useful life, they call it, of that home. And in average, in the States, it's 27 and a half years. I don't know exactly how they came up with that. That's unimportant. But what that means is you can depreciate the value of the home, decrease the value in theory, over that 27 and a half years, and at the end of that time, it'll be worth $0. Now, that's not actually how the value of a home works, right? It oftentimes goes up, but that doesn't matter. The tax code treats it that you're allowed to depreciate an amount. So, in this case, we would have $1,000 per month in depreciation that we can take against our gains, all right? So, that $6,000 in cash, as far as the government's concerned, it's a $6,000 loss, and that means you don't pay any taxes on it, all right? $6,000 of annual income, tax-free. Boom. That's how it can be done, and it is done in different scenarios. Now, this is also done with businesses. Usually you don't actually end up at a negative or a loss, or at least you're not actually making money if you did have a loss. But with business deductions, you can decrease a lot of that income, and your taxable income can be a lot lower than if you were just working a 9-to-5 job, right? But you still got cash coming in, and you're still spending it. It's just a lot more of your expenses are business expenses. Okay, so lastly, I want to talk about what you could do with this extra $6,000 loss. And this is kind of my strategy. So if you have those losses, remember I said you can only offset similar income or similar gains. So one place we can find that is by becoming a passive investor in a business. Okay? So first, I would become a passive investor, let's talk to you. You become a passive investor in a business you understand. Okay? Maybe it's even a buddy, but you know these guys are good, you know they're gonna continue to build their business, and you see it as a way that you can make some money. Okay? So you invest a little bit. Let's say you own 5% in a business that does $120,000 in net income the first year. At least the first year that you own 5%. Okay? That means, if you do the math, you're going to pay $0 of taxes on that $6,000 in income because your existing passive loss from the real estate property offsets this passive gain. I just want you to realize the power of this. Not only did you not pay any taxes on your rental income because there was a tax loss as far as the government was concerned, but there was an excess of that loss. So you were able to reduce other passive income that you had. Okay? This is one of the tools that people use to become absolutely rich. All right, it's minimizing how much goes to the government. And again, if your methodology of thinking about this stuff is that you want to pay more taxes because you think that's patriotic and everyone should pay a flat percentage of how much they have coming in the door, that's your right to believe that. While that's not the case, I encourage you to learn a little bit more, and you just did learn some of the basics, about how it actually works, right? We can talk about an ideal world until we're blue in the face. In fact, I enjoy doing that sometimes. We can grab a coffee. But in the meantime, let's learn the rules, how they exist, and let's work with them to our benefit. That's my humble opinion. Okay, so lastly, let's look at some exercises. What do you have to share? I always love to get a little dialogue, some comments in here. So first, what source of income is your biggest? For most people, it's earned income, right? And the government takes money from us before we even get that paycheck. It comes right out in the form of withholding. Second, how are you going to get passive income? Or are you not? If it's not interesting to you. If it's something you don't want to spend your time on, then that is cool too. Last, do you think paying $0 in taxes good, bad, or neutral? And with that, that's the end of yet another book learning installment, and I really appreciate you watching. I hope you have lots to say, lots to think about, and I look forward to seeing you in the next one. Happy Thanksgiving.